averages of all of these four projections, they are pretty much at the mid 6% ranges, right? 6.6% by Q2, 6.4% in Q3, and 6.38% in Q4. So definitely not getting down into the 5% ranges this year anyways, and potentially not next year either. Hey, what's happening, friends? There's a lot of talk about buyers who are like, hey, I don't know if it's a good time to buy. Like, there's all kinds of stuff going on in the market. The interest rates are high. And so I wanted to do a quick breakdown for you and show you what the cost of waiting to buy actually looks like based on current projections on what's going on in the market. So there's some pretty good data out there from really smart sources that do these projections and give us an idea of what to expect over the next year or so in terms of prices and interest rates. And so I'm going to take you through some of this data and then show you what the cost of waiting to buy actually is and help you make a decision on whether or not buying now with a high interest rate is better or waiting for the future for potentially rates to come down is better. And you can kind of do that analysis and figure out what works for you in your current situation. So bringing in the data here, the first thing we're going to look at here is mortgage rate projections over the next 3 quarters, right? So these are all of the big national banks and government agencies that forecast what interest rates are going to be. And sorry, folks, the bad news is that interest rates are not projected to go down significantly anytime soon. So if we're looking at through the end of the year, if we average out that this box all the way on the right are the averages of all of these 4 projections, they are pretty much at the mid 6% ranges, right? 6.6% by Q2, 6.4% in Q3, and 6.38% in Q4. So definitely not getting down into the 5% ranges this year anyways, and potentially not next year either. So looking at this, the longer you wait, I mean, you might save a little tiny bit on the interest rate, but we're not looking at any type of significant drop. And definitely the days of 3% and even 4% interest rates are probably long gone in our lifetime anyways, unless something super dramatic happens in the economy. But definitely in the foreseeable future, we're looking at this 6 to 7% interest rate environment. But let's say that interest rates go down to the high 5s. I'm going to show you guys what that looks like in a projection. So the first thing though is that I want to look at, okay, what are prices expected to do, right? And this breaks down home price appreciation over the last few years. And you can see in the 2021s how crazy price appreciation was, right? Definitely was not sustainable at 18, 17, 16%. But since the first quarter of 2023, and this is when prices started to cool off because of the increase in interest rates. Interest rates went up, and so price appreciation went down. We were still seeing quarter over quarter pretty steady increases in prices, right? So 5%, 6%, almost 7% here. And then rounding out the end of the year, we were just at the mid 4% ranges in terms of price appreciation. So prices continue to go up. Every market report I do continues to show this, that prices continue to creep up, even though everything else in the market is slow. So keep this in mind, right? Interest rates not looking like they're going to come down. Appreciation looking like it's going to continue to appreciate. And let's call it at 4%, even though that's very conservative. Let's call it 4%. So now looking at, if we break down, what is your monthly payment? Because at the end of the day, what buyers care about is, what is my monthly payment, right? That's what matters to them. That's how they qualify for their loan. And so if we just take a couple of snapshots out of here, and let's say we're buying an $800,000 house at 6.75% at current interest rates, your payment is going to be $5,189. If you wait, say in the future, and say best case scenario, it drops a whole point to 5.75, your monthly payment would now be $4,669. So about $500 less, right? If you have 1% less interest rate, your monthly payment would be about $500 less. And this is important because you want to factor in, how does that compare to your overall cost of purchasing the home long term? And this is pretty much how it breaks down if you do the math and you apply these projections that we just went through. So a 4% appreciation at best case scenario, a 5.75% interest rate, even though that's probably not going to happen anytime soon. If you're looking to relocate here on the Big Island, I want to share with you a resource that we put together. Over 80 agents from my team, expert agents here on the Big Island,
put together a relocation guide that will help you evaluate all of the important factors that you want to take into account before you move here to the Big Island. School districts, healthcare, employment, all of the things that you got to think about, we put into one home buyer's guide that will help you figure out what is best when you start this relocation process here to the Big Island. So if you want this guide, just click on the link below, fill out the form. We will send you the guide for free. And if you want to take the next steps and have a conversation with us, we'd be happy to help.
This is what the cost of waiting to buy looks like. So if you look at a 5.75 interest rate versus a 6.75 interest rate, like we said just now, it's about a $500 a month cost savings, so $6,000 a year, right? But if you're buying that same $800,000 house and you wait a year, and say a year from now the interest rates do go down to 5.75, and there was only a 4% appreciation, which is a conservative estimate on the lower end of what we've been seeing over the last couple of years, the home will appreciate $32,000. So now you're going to pay $832,000 versus just $800,000 today at the higher interest rate. And so if you look over time, what is your break-even point, right? Your break-even point for that $500 in cost savings to match the $32,000 in appreciation is 64 months. It's like 5 years. It would take you 5 years to break even. And you really got to think about, does that make sense over time? Maybe you could refinance in the future if you lock in that lower cost. So really locking in the lower cost, the lower purchase price, in many cases makes more sense and saves you more money than the small amount in the monthly payment that you will save by waiting for a lower interest rate, which is actually, if you asked me, harder to predict, right? If you look at the real estate market over the last 50 years, there's been a steady appreciation over time, and it's always 5, 6, 7%, sometimes a little bit lower, sometimes a little bit higher, but there's only been like 7 years in the last 60 years where prices of homes have negatively appreciated, right? Or they've depreciated. So 90% of the time, homes appreciate over time. We don't know what interest rates are going to do, right? It's very hard to predict. Everybody's been waiting for a very long time. All the experts are saying they're about going to be steady, maybe come down a little bit, but no significant decrease in interest rates. So you can count on the price of the home going up. You can't really count on the interest rates coming down. So something that you really want to consider is, what is your break-even point over time? And it can make a lot of sense, really, to purchase now at a higher interest rate, because it actually will save you money because you lock in the purchase price of that home and you don't have to wait for sometime in the future, hopefully, for rates to go down to match the increase in the cost of the home and the appreciation costs that you're going to have to deal with. So all stuff to consider, but it's something to really think about. Is do the math. I highly recommend getting with a very good mortgage broker. I can recommend one to you. We work with an amazing team here that can break all these numbers down for you and really give you the overall costs and different scenarios so you can make a good decision on your home purchasing. But again, this is a very big aspect to home buying, and especially in this environment we're in now and the market that we're in now. It's something that you really want to think about, is what is your cost of waiting to buy, because a lot of people assume that they'll save money by waiting, but in most cases it's not going to save you money. So if you have any questions about this, you want to do a consultation and run numbers, you can always book a meeting with the link in the comments below. You can email me at Dylan@BuyBigIsland, and always here to help out with this and figure stuff out and hopefully point you in the right direction. But I hope this helps give you some perspective of what the cost of waiting to buy is, and always appreciate you guys watching. I'll see you guys next week. Aloha.